Welcome back. Shares of Alimentation Couche-Tard under pressure. There's the stock down 2.5% as we inch towards the end of the trading day. This comes after the company about 24 hours ago, just after markets closed yesterday, reported adjusted profit that missed expectations. Lower fuel sales were a factor there. For more on this and other market movers, we're joined now by Bloomberg's Stephanie Hughes. Stephanie, thanks a lot, as always, for joining us. Boy, investors are not impressed with those numbers at Couche-Tard. There's real concern about moderating sales growth.
Absolutely, Paul, you could say that again. Couche-Tard shares are down as much as 5.7% today, and that was its worst intraday drop since March, and it put it among the worst TSX performers after the company missed on its fourth quarter estimates there. So adjusted earnings of 48 cents per share, just missed by about 2 cents, and like you mentioned off the top, that was due to weaker fuel sales and same-store merchandise sales slipping as consumers pull back on spending, which makes sense as they're grappling with inflation, higher interest rates, etc. These are some of the headwinds that you and I talked about yesterday leading up to the results, and now they've been laid bare in the earnings today. Another detail from the earnings is that we saw the Chief Operating Officer, Alex Miller, appointed as the new CEO as the previous CEO went into retirement. Analyst reactions appear to be a bit mixed. We saw a TD Cowen analyst flag the weaker U.S. fuel margins as an issue. And while these margins came ahead of what analysts were expecting, the analyst also said there were enough misses elsewhere to kind of prove a mark against the company. RBC analyst Irene Nattel said it was not a quarter for the history books, but it was better than the third quarter in certain regards. So analysts may be mixed, but traders are looking at this as a negative, and that's being reflected in the share price today. Same cannot be said for First Quantum. That was a top TSX performer for most of the day when those shares moved up as much as 7.4%, extending a week-long rally. So this seems to be because of a Deutsche Bank analyst raising the recommendation to a buy rating from a hold rating and revising the price target to $26 from $19. So while the miner stock has been down about 40% since the Cobre Panama mine closed last year, and there's been an eruption of protests in Panama last year, and the analyst said that while there's uncertainty surrounding that mine restarting, whether it does restart at all, he still sees attractive risk-reward at these levels, especially since the closure of the mine has been an upside driver to copper prices. So if the mine stays closed, copper prices stay higher. That's good for First Quantum, the analyst says. If the mine reopens, then that's significant upside for share prices, which, of course, is good for First Quantum. The last stock I'm looking at is Air Canada, and that's another TSX high flyer, if you will. Those shares moved up as much as 5% after the airline operator announced it was adding new sun destinations to its flight network just this morning. So that includes more frequent flights to 55 Caribbean and U.S.-based destinations over the winter from Canadian cities like Quebec City, Ottawa, and Montreal. Air Canada shares have been under pressure just in general this year for a number of reasons, mostly because Canadians have been pulling back on spending on travel, and there's been concerns of a weaker Canadian economy. Now, this is significant for Air Canada because the Canadian domestic travel market has been its most profitable segment, one of our analysts said. So traders are also wary of the air carrier has yet to work out a labor agreement with its pilots, so that could lead to some labor costs in the future. So still, shares are moving higher today, and there are some jet-setting Canadians out there, including myself. I'm going to the East Coast this weekend, and I will try my very first lobster roll.
Stephanie, have a great time out east, and don't go too far because we want you back here next week. Bloomberg's Stephanie Hughes reporting from the Bloomberg Bureau in downtown Toronto.